Banks are finally in a sweet spot after almost 5 years. In the July-September quarter of this financial year, most of the commercial banks have performed well, be it in terms of net profit or improvement in asset quality. The performances of both private and public banks are worth mentioning. Let's have a look at 5 major takeaways from this quarterly results of the banks. For the first time in 5 years, both the private and public service banks reported a jump in profit by more than 50% as compared to the corresponding period last fiscal. State Bank of India alone contributed to the most to the profit earned by the banking sector. SBI posted its highest quarterly earnings as it reported an increase of 74% from the same quarter last fiscal. Now the question arises, what led to the surge in their profit margin? The answer lies in their asset quality. The asset quality denotes the quantity of existing and potential credit risk associated with the loan and other investment portfolios of the banks. In every quarter, especially after COVID-19, the NPA or the non-performing asset of the banks was on the rise until this quarter. For the first time after COVID-19, most of the banks managed to bring down their NPAs with a good number of recoveries. Other two major factors that contributed significantly to the profit are the improvement in provisions and higher credit growth. Credit growth is determined by the number of the amount of loans disbursed by the banks. Loan loss provisions are the portion of the loan repayments kept aside by the banks to cover the portions of the loss in case there are defaults on loan payments. ICICI Bank witnessed one of the best improvements in terms of provisioning as the provisions declined by 39%. Bank of Maharashtra topped the list among public sector lenders in terms of loan growth in this quarter. The bank recorded 28.62% increase in terms of lending. But does this mean the banks need not to worry anymore? Are all the concerns over? No. Despite several developments, banks have failed to have good deposit growth. Deposit growth is determined by the number and the amount of savings account, current deposit account, fixed deposit account and recurring deposit account. Although banks have increased the interest rate on such deposits several times in the last few months, it has failed to witness the deposit growth. Will the banks be able to witness deposit growth in this coming quarters? Why have they failed to attract customers despite the rate hikes? Let's wait till the next quarterly results to see how the trend goes.